We have an emergency on our hands. I mean, a real crisis. Tesla stock is currently down 2% here in after hours, following the Nasdaq's decline of almost 1% currently. This is shaping up to be a rough day for markets coming tomorrow, and it has the possibility to be a black swan event. We do have important data that will come out bright and early in the morning tomorrow. We've actually talked about this specific data point for over a month here on the channel, and the possible implications this will have for bond yields and for our markets. Well, the time has come, the test of faith for stocks. If we fail from here, the downside could get ugly quickly. We have an emergency update for all Tesla stock investors, or really anyone that has their money in this market. You need to hear this information as quickly as possible. The best time to have heard this information was a month ago. The second best time is right now. So if you are ready to get into a whole bunch of information, Tesla option activity today, everything we just discussed, why in the heck the markets are falling, what kind of downside we could see in our markets based on this data report coming out tomorrow, and much more, hit the like button. Number 1. Number 2, subscribe to the channel. And number 3, if you guys are scared here and you want to come hedge out your portfolios, come make some money with us, and maybe not sit on your hands and watch your portfolio bleed every single day, well, come check out that link down below in the description of this video to join the trading community. We are currently in the process of putting together an all-inclusive trading package to start you guys from beginner to advanced, that if you sign up for that course beforehand, you're going to get that pricing that is outlaid today and not what it's going to be in the future when that course is added to it. So what in the heck is going on right now in our markets that is causing stocks to fall almost 1% on the Nasdaq here in after hours? So let's start this video off with the juicy stuff. What in the world is going on right now in our markets that is causing the Nasdaq to drop almost 1% here in after hours, that is causing Tesla stock to drop almost 2% in after hours? Well, Meta being down 3.5% in after hours following their earnings is not a great place to start. Apple is down 1%. Google was down 9.6% today and dropped another 2.22% here in after hours. This was the largest single day drop for Google since 2020. I think a lot of people forget, even myself sometimes. 2020 was almost 4 years ago. That's honestly a crazy concept. Even Microsoft is down almost 1% here in after hours. Microsoft was up 3% today. If Microsoft did something similar to Apple, Apple was down 1.3% today. Today would have been an over 3% declining day for the Nasdaq. So it looks like you're getting one of those classical, we're up the day after earnings, and then you give some of that back the next day. And Microsoft is doing just that. One of the biggest reasons why stocks were down so much today is TLT. TLT was down 2.23% in regular trading. You're down another 0.38% here in after hours. It's almost like someone knows the data report tomorrow is going to be really bad. After all, Jerome Powell admitted on one of the last press conferences that he gets the data reports either the day before or the night before they come out. So it wouldn't be a big shocker if the algorithms also get the data report before it comes out to somewhat price that in the day before. And if that's surely the case, well, that would make sense why stocks are down almost 1%. To make matters worse, USO, which tracks oil, was up 2% today. The dollar was up 0.25% today. Gold was up 0.41%, up another 0.05% here in after hours. This is particularly not great because gold is a safe haven asset. People buy gold when there is fear. You know what else is a safe haven asset? Bonds. Bonds did not get bought today. So it's not like we don't have fear out there. There is fear out there. Middle East conflict, that's number one. That's causing a lot of fear right now. And we actually got some bad news here today on just that. Israeli Prime Minister Benjamin Netanyahu has announced that the date for the ground invasion of the Gaza Strip has been set. Speculation has it that this could come as early as tomorrow. Quote, later this week, which tomorrow is Thursday. But back to the bonds. The bonds are now down 0.41% here in after hours. This means that yields are shooting up again. The 30-year Treasury was up around 15 basis points today. The 10-year Treasury was up over 12 basis points today. This means pressure on the real economy is growing at a very aggressive pace. That means banks have a lot of unrealized losses that are getting bigger each and every single day, potentially risking to break something in the economy. The problem is, if this data report comes in which the markets are suggesting it will, well, yields could go much higher. And this fear around the globe, this fear in financial markets is not translating into investors buying the bonds. That's a very scary situation to be in. This could actually cause the Fed to give you emergency rate cuts, even if the economy proves to be stronger than what we expected. So what I'm alluding to here is the GDP growth rate quarter over quarter advanced data for Q3. We've talked about this for over a month now. We used to talk about this a little bit more, and then we've had other problems and crises come and go. So we haven't talked about it as much within the last 2 weeks or so. But 1-2 months ago, we were talking about this specific catalyst a lot. You're expecting 4.3% for your GDP growth rate quarter over quarter. Last month, or last quarter, you seen 2.1% growth. If we get a GDP report of 4.3%, bond yields are going higher, just like they did today. This is going to put more pressure on stocks, more pressure on the economy. What this drop in after hours, especially on a Tesla is now down about 2.5% in extended trading. This suggests to me the GDP report tomorrow could come in way hotter than even 4%. You could see 6% or more for your GDP report. That's probably going to mean the markets are going to price no rate cuts for 2024. They're going to price rates basically as higher forever. If the economy is still chugging along with 8% mortgage rates and nothing is breaking, the unemployment rate basically refuses to go higher, the Fed's probably going to have to raise rates at least a couple more times. After all, Jamie Dimon said 2 days ago, quote, whether the whole curve goes up 100 basis points, I would be prepared for it, he added. I don't know if it's going to happen, but I look at what we're seeing today, more like the 70s. A lot of spending, a lot of this can be wasted. 100 basis points equals 1%. He's saying the Fed might actually raise rates another 4 times. That's possible. Be prepared for it. Fact is, stocks are not prepared for it. Banks are not prepared for it. And investors are really not prepared for it. So let me just tell you, if the GDP report comes in higher than what we're expecting of 4.3%, if we get anything in the mid 5s or 6s, or I don't even want to think about even higher than 6, but if we did, that could be a black swan event. Have you guys ever seen a circuit breaker for the markets? Well, that would be a possibility tomorrow. And I know that sounds crazy. If you guys have never seen a circuit breaker, then maybe you don't know what fear truly is in the markets. That would be a full-on capitulation event. That is when the markets drop 7% in a single day. Back on March 20th, I believe it was, March 13th, maybe March 20th, maybe it was March 13th. You had 2 circuit breakers in one day. Stocks drop 7%. They get halted for 15 minutes. The whole market. If you drop to 10%, you get halted for another 15%. And ever since October 19th, 1989, following Black Monday when stocks dropped 20%, if stocks drop 20%, trading closes for the markets. Now, I wouldn't expect a 20% fall. I wouldn't even expect a 10% fall. I wouldn't even expect a 7% fall. But could that happen? Is that a possibility if you were to get 8% GDP tomorrow? Sure. I mean, bond yields are probably going up. I would imagine half of 1% tomorrow would be realistic to expect, potentially. That could break something. That could actually, again, cause the Fed to give you rate cuts. Because let's be honest with ourselves. Inflation, if you look at core and you exclude housing, which has serious lag delays because most leases are 12 months. If you take out housing, you're actually under 2% for inflation. The Fed knows this. Come on now. The Fed knows that. So is it too unrealistic what I'm saying? No. Is it the most likely outcome? Hopefully not. You don't want to see rate cuts and a crashing market. It's just not good for the population. If you have puts, you'll be happy. But again, that's just not something ethically you should wish on anyone, let alone the economy and what kind of impacts that could have to people. Now, it's not just this GDP report that could be the problem. That could send stocks down big, that could give you rate cuts. It's also this Middle East crisis. We don't know a lot about what's going to happen. There's a lot of uncertainties, but we know one thing. It's not going to be good. It's not going to be good for oil. It's not going to be good for the economy. On one hand, if Iran theoretically were to restrict the flow of oil, 20 to 30% of the world's oil supply flows through the Strait of Hormuz, well, that could cause your gas prices at the pump to be $10, $15, $20. I've talked about this before. That's obviously not great for inflation, but that would be even worse for the economy. That would basically instantaneously put you into a recession. Again, another good reason for the Fed to theoretically cut rates. Also, don't forget that you're heading into an election year in 2024. The markets are already paying attention to 2024. 2023 really doesn't matter anymore. It's all about the estimates for 2024. If you were to theoretically see a large market decline, that puts the current president in a very bad spot, considering he's running for re-election. If you get a decline in the markets, you have unaffordable cost of living, well, that's a big problem. People don't vote on the best policies. People vote on their pocketbooks and the economy. So yeah, this situation could spiral out of control, well, faster than I smash a plate on Thanksgiving, or multiple plates of food on Thanksgiving, or my daughter's Lego cake that she just built me. Here you go. Tomorrow, we are also going to be getting durable goods orders month over month. Last month, you had 0.2%. You're expecting 1.7%. So the expectations here are for a really strong economy as well. Now, I have already shared this chart with you guys, but I do want to point this out yet again. This is looking at forward PEs on the S&P 500, the S&P 400, S&P 600. 400 and 600, the green and the blue lines on this chart. Think about those as small cap stocks. They are trading at historically low valuations. The only time you were lower than this was during the depths of the crash in 2022 and the depths of the crash during the Rona, as well as '08. Other than that, you haven't been at this level. But as I previously said, notice how the green and the blue were basically throughout the last 20 years always higher than the red, which is the S&P 500. Pretty much like clockwork. They were always way above the red line. That's because your higher growth companies typically are your small cap companies. Your mega caps usually don't grow at 50, 100% a year, but some of your small caps can, so they do constitute a larger or higher valuation. Well, what happens from here, two different outcomes. Either the S&P 500 comes down and matches the valuation with the small caps, and then everything rises back, whether that is due to the Fed cutting rates or due to just time taking its course, in which it feels like time has already taken its course on small and mid cap stocks, or small and mid cap stocks recover from here. And that seems not as likely unless you were to get rate cuts after a market decline. Then I could see S&P coming down a little bit as far as forward P valuations, and then your, green and blue lines here, your small caps, really rocking higher. Now, you guys got to remember, what's the difference here between these two, right? S&P 500, the valuation is where it is, above the green and the blue lines, because of why? Why? Simple. Your top 10 large tech stocks, they're the ones with the super high P multiples, and they are the ones that are disappointing on earnings. Meta, again, down 3.31%. Google, again, down 9.60% in regular trading, down another 2.5% in after hours. Microsoft was up 3% today, but down another 1% here in after hours. Tesla has rolled over. Tomorrow potentially could be Amazon's turn. Amazon reports tomorrow after the bell. If Amazon suffers a similar fate as Google, as Meta, or some of your other big tech names in which we previously just mentioned, well, look out below for our markets. Amazon is not just a big tech name, it's also one of the leading indicators for economic activity, for consumer spending and consumer consumption. You're also going to get UPS tomorrow morning. That's going to be a big one for the markets as well, and the markets usually react to UPS earnings because they're also another bellwether for the state of the consumer. So if UPS has bad earnings, it's just going to make the markets even worse. And again, stocks are down about 1% here in after hours. Tesla is down over 2%. I think it's pretty clear the algorithms already know we're going to have a really hot GDP report. And holy moly, Tesla, man. Jeez. I've never reported so high of a number for option activity with Tesla in any given day. That came out weird. There has never been a number this high for the dollar amount bought or sold in Tesla options in a single day. And yeah, you just got a blowout number. Tesla had 786 orders today, totaling $4.03 billion with a B, with a positive order value of 64%. So it's clear. A lot of money went into hedges today with Tesla, and a lot of money went into buying long positions in Tesla. As I reported in the video earlier, towards the end of the day, really throughout the last 2 or 3 hours or so, it looks like people got tipped off on this report coming out tomorrow. There was a reason, in my personal opinion. You had $4 billion worth of Tesla options placed today on Tesla stock, because if you do get runaway rates, and say the 10-year does theoretically rise to 7% or so, 6%, pick your number at this point, that's going to hurt Tesla probably the most, because it's going to make Teslas unaffordable. It's going to make anything finance related unaffordable. You've seen $80 million trades, $100 million trades, 50, 95, 30 million, 80 million, 107 million. Just the list goes on and on and on. Now, a positive order value of 64% means more of this $4 billion than not was positive. But even then, you're well over a 1.8 billion worth of bearish options today on Tesla. And again, it's no coincidence that you are seeing the highest dollar amount that I've ever seen go into Tesla options. I've never seen a $4 billion number in any given day go into Tesla options. No matter if Tesla does really good, really bad, before earnings, after earnings, events for Tesla, I've never seen a $4 billion number before. I've seen high 2 billions, I've seen low 3 billions, but never 4+ billion. It's no surprise that you get your GDP report tomorrow. Tesla stock's down 2.5% in after hours, almost 2.5%. And you had $4 billion worth of Tesla options bought today. And a lot of these were big hedges for the downside. So yeah, I hope this video is not coming off as too doomy and gloomy, because if you're a long-term investor, this should make you very excited. You get to buy more shares of Tesla at a cheaper price or pick up other great stocks at cheaper prices. This is a gift for long-term investors. A lot of people think stock market crashes are negative. Absolutely not. If you're a long-term investor, that's exactly what you want. And I think you're going to get a better chance to buy the dip here very shortly. Tesla stock did indeed close under its 200-day moving average. Looks like you're going to get more of that downside move. I will note, and I will point out, that Tesla was down 1.89% in regular trading today. Off the highs, it was down more than that. But all in all, you were down 1.89% in regular trading. That was better than the Nasdaq's almost 2.5% decline here in regular trading. So Tesla might hold up better than the broader markets. Now, if you look at the Nasdaq, I've had these two lines charted out for a while. This downtrending line of support that you hit ever since you base out the low of June 23rd and connect the lows to this trend line, well, you can see in regular trading, you closed under that by a couple dollar difference, couple dollar margin. Well, here in after hours, you're now down to 347.15. You're quite substantially now under this downtrending line. To me, this means we're at least going to that 200-day moving average. At least. That's another 3.5% down from here. Question is, do you find support there? Or do you fall even more? And I think the way that your big tech earnings are going this earnings season, you probably are going to fall more than that. Really, your fill the gap level is down to about 321 on the NASDAQ. That would be a drop from here of about 8.2%. Call it 8.5%. That's going to put you close to your August 2022 high. Still quite a bit off the lows. If this thing were to get really ugly and you did see this Israel invasion turn into a negative event for oil, if you did see a full-on capitulation, you could fall more than that. Like I said, 10, 15, 20, 30, 40% are all possible outcomes here. Now, obviously, 40% is a lot less likely than 10%. I think 10% is probably a certainty close to it at this point. Unless something really good were to happen, this conflict were to end, the GDP report came in really light, 10%'s almost a certainty, in my personal opinion. I'm not a financial advisor. I'm not a financial planner. Anything can happen. So do your own due diligence. These are only my opinions. It may be a little bit of good news for Ford, which could be having some effect on Tesla here in after hours. The UAW has reached a new contract agreement with Ford, according to the Wall Street Journal. Ford has agreed to give factory workers a 25% wage increase over the life of the agreement, including an 11% bump in the first year. The wage increase would bump the top pay for assembly line workers from around $32 an hour to roughly $40 an hour. The UAW has also reduced the time it takes for new hires to reach the maximum wage, reducing it to 3 years from 8 previously. We don't have all of the details on this, but I'm sure that is not exactly helping Tesla stock here in after hours, and probably making that 2% sell-off actually 2%. It was not 2% until roughly that news did come out, and that's probably having a decent role to play in this drop that we're seeing. As far as Tesla stock and where Tesla could go if the markets fall, well, it's hard to say because we don't have a crystal ball. We don't know how far the markets are going to fall, but your next major level of support is going to be around $200 per share. That's probably going to get blown out pretty easily. You're currently at $207.76. You're probably going to fall under that pretty easily. 180 is your next big buy level. Under that, 150. And if you were to see a really rough market, like 20% drop from here or more, you could hit that 130 level. But at that point, you really want to be aggressively buying Tesla, in my personal opinion. Obviously, do what you guys want to do, but that's what I will be doing. If you guys would like to come trade with me live in real time, come get access to all of the trades that I make every single day, every single time I make them, get access to every time I buy the dip in Tesla stock. Come ask questions, come learn, come grow your knowledge, hopefully become a more profitable trader and investor. Hit that link down below in the description of this video. That's going to do it for this one. Hit that like button and subscribe to the channel. The best prescription for your complication is indeed a subscription. Hit that subscribe button. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.